The Morgan Report with David Morgan.
David Morgan of themorganreport.com for the week ending 9 September 2022. Well, as I said last week, real quickly, we are in interesting times, and if you haven't watched the bail-in, you can go to the website, click here, and scroll down a bit, and click that and listen to it. I've been doing a lot about this bail-in situation, and will continue to pound the table. So, yes, you could go broke overnight. Not that it's going to happen, but you want to be balanced in your portfolio, and that means inclusion of something outside the system. And really, gold and silver are outside the system. They're not a stock, they're not a bond, and they have no counterparty risk. That means you don't have to go overboard. So I think the first thing I'd like to point out is this Bloomberg article. Crash-obsessed traders splurge on options at two-decade high. Seasoned investors started at a world clouded by war, inflation, economic uncertainty. Institutional traders paid $8.1 billion to initiate purchases of equity puts last week, the highest total in 22 years. That's a big bet on the stock market going down. Usually those big bets are right. Options are tricky. You got to be correct, and you have to be correct in a hurry. Nonetheless, it would be a crash alert. Many of us in the alt financial press do believe that September, October, we are going to witness something to the downside more likely than something to the upside. Time will tell. I'm on record as saying by the end of this October, just a couple of months away, I think that most people will realize we are in a new paradigm. And even though they may be in denying reality, they will no longer be able to deny it because it will be so crystal clear that just about everyone will see it. This article is over a week old, but it's worth reading. The outlook for gold and silver amidst rising inflation comes from Amy Rodham. The Assay is the name of the website. I think I said that. It's a very good article. I think you should take a look at it. I think that there's a lot of people that are under the misperception that the central banks are all powerful and they can control whatever's going to come at them. All you have to do is look at what's going on in the energy markets between Russia and Western Europe, figure out that things are pretty dicey at this point in time. And I want to thank the Silver Institute, Mike Dorenzo, for coming to the Silver Summit and doing a great presentation for everyone. This is the latest newsletter from the Silver Institute. These are free. You can find them on the website. I'm not going to read it to you. You can read it on your own. The highlights are silver still used in photography. Yes, but to a much less degree. The unfortunate demise of Bradford Cook, basically from Endeavor Mining, and was current president of the Silver Institute. And I know Brad extremely well, spent many hours with the man. In this newsletter from the Silver Institute is a new way to coat body implants with silver. Silver helps with tests for COVID-19. Silver helps pomegranates grow and strawberries last longer. And a new technology to recycle silver from solar cells or solar panels shows some promise. So that's basically a big outline of this. You can download it and read it on your own time. Staying a bit more in the silver focus, BBC. Solar panel sales boom as energy bills soar. Well, yes, indeed. And I don't think that's just for the UK. I mean, ask anyone again in the UK or anyone dependent on energy that has to be imported. They want to move to an alternative, and solar, of course, is an alternative. Of course, so is burning wood in a stove. And, of course, that's going to take place as well. And diving a little deeper on the solar side of the equation, this is from Interesting Engineering. The world's largest solar park will produce 5 gigawatts of energy by 2030. Pretty interesting. You can go to the web and find this article. And this is the Dubai Electricity and Water Authority is aiming for 5 gigawatts by 2030 in this, I won't pronounce it or mispronounce it, the largest single solar park in the world. So solar's not going away. Of course, I think we all know that. But I think if I have one critique of some of the presentations at the Silver Symposium last week, it would be that I think personally that the idea of what the amount of solar demand will be for this year and next is probably going to miss the mark. I think it's going to be far higher than some of the projections that I heard at the conference. Doesn't mean I'm right. It's pretty easy to tell with what's going on, again, energy-wise, that there will be more demand. Okay, I'm going to wrap this up pretty quick. This is one of my later Twitter feeds today, the 9th, as I'm doing this podcast on a weekly perspective. We just put out a new research report and for our premium members. And I just want to bring this over for your attention. The price of this stock is, and I'm going to give the prices, the net asset value of the epithermal operation in this base case using $1,500 to $1,600 gold is very close to the market capitalization at the time of this writing, which means today, excluding the exploration upside realized over the last 2 years and any upside in the future. In other words, investors are essentially paying for the epithermal deposit and getting the other deposit and additional exploration upside basically for free. So it's very little downside risk. Yes, it's a speculation. Yes, they're more volatile. And yes, it's probably in the dollar range. I won't give the exact price. There is no sense in trying to model a fair price per share, given that the majority of the value lies in this deposit that isn't being valued yet, and other near-surface mineralization not in the current mine plan. We think it's hard, if not impossible, to imagine that this company will not be acquired in the future, likely by a senior for Tier 1 asset, Barrick Gold or Newcrest, Newmont, who knows. That's our opinion. Read the disclaimer. If you become a member, you can see this. It is on the members-only portion of the morganreport.com. And I'm also going to put out a trade that is another pretty much of a gimme. Nothing guaranteed the financial realm. We all know that. But low risk. Most people underestimate risk when they invest. And that can lead to very hard lessons by losing money, fiat. And lastly, I just want to do a little bit of talking here. I listened to the Cato Institute recently, and in one of their meetings, they had Jerome Powell from the Fed talking about inflation mostly. And what I thought was so interesting, first of all, you can look up the Cato Institute, and by the way, I am a member. But, very gentlemanly on both sides, of course. But one of the things that Powell said that I think might have gone over the heads of some, probably not the Cato Institute people, is he talked quite a bit about inflation being, and he didn't use the word psychological phenomena, but that's what he meant. He kept talking about once the belief that more inflation is ahead, it's really, really difficult to quell that belief system. And of course, it went back into, the 1980s or early 1980 when Volcker moved the interest rates up, but how long it took for the psychology to actually believe that lower inflation was possible, low inflation was here, and low inflation was here to stay. And of course, some people, there's a very well-known, does excellent videos and has extremely well-known guests that talked about, inflation is gone, and some really interesting things. Of course, he's been proven wrong, but the idea is that the psychology in the market is something that isn't really talked about. The late, great Jim Dines wrote a book about the psychology of the market. And for those that are market students and really want to understand how to make money in the market, you can analyze your brains out, and that's fine. You can quant all you want to quant. But if you really want to understand, you got to understand the psychology. And that was something lacking in my toolkit earlier in my early years. I certainly don't overlook it now. So my point being that the Fed has a very rough road ahead. And he indicated in this talk at the Cato Institute that they were fearless in their resolve to continue to increase interest rates until the job was done. Now, that's just rhetoric, folks. It could be pure propaganda. I don't know. But at this point in time, my take is that they are going to continue and see as the economy, quote unquote, breaks further, there will be a lot of pain, more than already exists, as we go into the future with the physical economy. So I would say lower your debt if you can, second job if you can. If you're already prepped up, that's great. If you're not, you might consider reprioritizing your personal situation. As I've said in the past, I'll repeat it now, that, if you're a two-car family and only one person's working, you might consider getting rid of one of the automobiles. You save on the insurance, the gas, the maintenance, and everything else. And yeah, it's not as convenient, but it certainly is less debt, more assets, or more equity. In other words, turning it into liquid cash and paying down a debt, or putting it into metals or whatever you want to do. So I won't go too far down the road. As I taper off my voice, I will sign off for another week of the Weekly Perspective with David Morgan of themorganreport.com.